Hi, Westfielders. Without a functioning banking system, our economy will fail. Bank failures, bank rescues, and declining confidence in banks have dominated the news over the last few weeks. I cannot think of an issue that is more important. If banks falter and lending slows to a crawl, everyone is going to suffer. What happened to Silicon Valley Bank, Signature Bank, and Silvergate Bank? How are these failures impacting other banks and the economy? In this video, I will explain how our banking system works, what caused the three banks to fail, how the Fed stepped in to protect depositors, help other banks, and retain confidence in the banking system. How's the economy responding to the Fed's action, and how does the future look? Hi, I'm Rich Hopen, the creator of the weekly newsletter, Important Stuff in Westfield, Town, Real Estate, and Business News That Matters. I'm a real estate broker with Compass in New Jersey, and I focus on Westfield. In the next issue of Important Stuff in Westfield, I'll jump back into the local Westfield issues, but right now we need to address the current banking crisis, and that demanded an entire issue. When you deposit money in your bank, the bank will take a portion of your deposit and lend it out as car loans, mortgages, credit cards, and business loans. Your bank will be profitable if it collects more in interest payments on loans than the interest it pays out to depositors. Holding a portion of deposits at the bank is known as fractional reserve banking. Typically, only 8% to 10% of bank funds need to be available for depositors' withdrawals. When banks need to borrow money to fund loans, pay withdrawals, pay debts, or meet other obligations, they have a couple of options. One option is to borrow money from other banks and pay interest to those banks. A second option for banks who need money and who cannot borrow from other banks is to get a loan directly from the Federal Reserve. This is known as the discount window and referred to as the option of last resort because the bank is stigmatized and they have to pay a higher interest rate. What caused the three banks to fail? Let's start with Silicon Valley Bank. It shut down on Friday, March 10th. This was the 16th biggest bank in the U.S. with $212 billion in assets and the second biggest bank failure in U.S. history. Silicon Valley Bank, known as SVP, catered its services mainly to startups and venture capital firms, had been poorly managing risk, and was closed by the Federal Deposit Insurance Corporation, or the FDIC, after there had been a bank run. The bank had been repeatedly warned of its problems, but failed to address them. Silvergate Bank, which accepted deposits from the crypto industry, also experienced a bank run, which was triggered by a warning by U.S. regulators about crypto volatility, and there was ongoing press releases about crypto and tweets from politicians who vehemently oppose crypto. Signature Bank was one of the biggest real estate lenders in the New York area. They had close business relations with many of New York City's top apartment landlords, but it was looking to reduce its reliance on real estate and add other industries to its client roster. Deposits from crypto companies helped the bank double deposits in 2 years, but the collapse of the crypto exchange FTX caused Signature to lose billions in deposits, and that led to a bank run. In each of these cases, poor risk management and bank runs were contributing factors to the bank's failures. It's a reminder that banks, like any business, must manage risk and remain adaptable to changes in the market. In the wake of the recent bank failures, the federal government took action to protect depositors and prevent future bank runs. The FDIC guaranteed uninsured deposits at failing banks, so all depositors, including those with deposits greater than $250,000, would receive all of the money. The money is not being paid from taxpayer dollars, it's being paid out of an industry insurance fund. The government offered relief to vulnerable banks through an emergency lending program called the Bank Term Funding Program, which provide loans up to 1 year to banks, provided they provide certain collateral, U.S. Treasuries and mortgage-backed securities. The loan terms are more attractive than what's offered right now through the Fed's emergency discount window. Critics argue that the program is stimulative and counter to the Fed's efforts to reduce inflation by introducing liquidity into the marketplace. The federal government is saying to the banks, we will give you a loan on that money that's in securities, and we're not going to pay you the current market value. We're going to offer you a loan for 100% of the face value. If a bank bought a bond and won't mature for 10 years, whatever that value is at 10 years, that's the loan amount that the federal government will provide to the bank. The banks that borrow money under this program, their identity will not be disclosed to the public. That creates some opacity in the marketplace. That's going to have the effect of banks less likely to loan money to one another. What's happened since the government stepped in a few weeks ago? Since the Federal Reserve stepped in to protect bank depositors and prevent future runs, there have been a few developments. Credit Suisse borrowed $53.7 billion from the Swiss Central Bank to shore up its liquidity, and First Republic was rescued by 11 banks for $30 billion. UBS took over Credit Suisse in a $3 billion mega merger. And First Citizens is buying a large piece of Silicon Valley Bank. The recent stress in the banking sector, combined with lending conditions that already began to tighten, and the recent quarter-point raise in rates, has increased the likelihood of a recession. Commercial real estate industry, which contributed $2.3 trillion to the economy last year, could be particularly affected because of bank credit tightening. In residential real estate, mortgage rates have fallen since the recent bank runs. However, the banks may tighten their lending standards, and obviously this could impact a certain class of borrowers. Overall, while the actions of the Federal Reserve have helped restore confidence in the banking system, there are still potential challenges ahead. That's it for this week's Important Stuff in Westfield. Join other Westfielders who have subscribed to this YouTube channel, and go to my website to subscribe to my newsletter. I also have the links for that below. Make sure you like this video and share it with anyone you think would find this interesting. If you have any questions at all about real estate in New Jersey, reach out to me. I'm your guy. I'll see you next time.